So gold is soaring. Look at that, $1,955. It's up well over $300. Did I get that right? Yes, absolutely. I'm sure we got a picture of it on the full screen, and we will put it up there. And the question is why? And the question is, should everybody be buying gold all of a sudden? I don't know. I thought the Fed was tight. Why is gold going up? Let's ask Dan Clifton, head of policy research at Strategas, and John Carney, Breitbart economics and finance senator and co-author of Breitbart Business Digest. Gentlemen, thank you very much. So Dan Clifton, very controversial piece. Now, we know you're a cult figure and you have a massive following, which is great stuff.
Yep.
And the fact is, gold looks very hot. So we've got a full screen. I think we're going to show it. Here are the reasons why. McCarthy's plan to raise the debt ceiling. Okay. Janet Yellen's stealth QE. So you say she's going to have, the Treasury's pouring money in to stave off the debt default problem. Yep. The Fed is ratcheting down interest rates, all right? That's the market expectation. Saudi Arabia doesn't like dollars, and they're going to do oil transactions and Lord knows what, maybe Chinese yuan, and then the Russian-Ukraine re-escalation. Let's talk about the debt ceiling. That's always fun. I say save America, stop spending. But what did you say, save America, buy gold?
No, I think we're saying the same thing, Larry. So we're going to have a protracted legislative fight to cut spending. If Kevin McCarthy is going to be successful, the Democrats are not going to take that very easily. So we're going to have a fight. We cut spending in 2011. Gold rose through that. And there's going to be times over the next 6 months where it doesn't look like the U.S. is going to raise its debt ceiling. I'm, like you, believe that we have more than enough cash flow to continue to pay interest on the debt. But you know the market expectations are going to shift. There's been a huge surge of credit default swap buying on the U.S. government. That's probably going to continue until you have some sort of resolution. Republicans have to pass a bill that cuts spending to force the negotiation. That's going to take time, and that is going to put at least a little bit of more of a bid in gold moving forward, combined with all the other factors that you listed.
I think it's a plausible scenario, and the flip side of that is Yellen's stealth quantitative easing, because the Treasury Department will be reducing its cash position, putting a lot of money. It's like really a form of old-fashioned open market operation. So, no, I'm not saying...
No, Larry, this is very important. Janet Yellen is providing more liquidity today than the Fed is taking away from money growth or from quantitative tightening. So what's happening is gold, Bitcoin, the NASDAQ, all those are starting to catch a bid here because the market thinks that there's less tightening coming from the Fed. And I think that's correct. And I think that's a big driver of all this.
By reducing their cash position, that's all I was saying. It's actually an old form. It was the original form of open market operations going back 100 years ago. John Carney, I want to ask you about what Mr. Clifton is saying. The evidence, by the way, is very strong. Did I see gold's up again today? Gold's up like, I don't know, maybe $350. Is this all about the debt ceiling? Is this all about the Treasury Department putting money back into the economy? What do you think, John?
I think there's a couple factors. The one you named, I think the Saudi Arabians saying they'll be willing to take things other than dollars is a very big factor. I also think that's something that's not on Dan's list is the apparent easing of conditions in Europe, where it doesn't look like the recession that we thought they would already be in is going to be as bad, or if it's going to happen at all. That makes European assets more attractive. Last year, especially midway through last year, really people were looking to buy all sorts of dollar-denominated assets. The dollars declined a bit. I think that's helped gold as well. And so I think we're seeing a sort of move away from some of the global recession trades that were going on into people diversifying their portfolios a bit, and that's put a bit on gold. I think gold goes higher. I don't think it goes up another $300 from here, but I do think it gets above $2,000.
Oh, above 2,000, shades of the late 70s, early 80s. By the way, John, I didn't want to let it slide by. The dollar exchange rate, now, relative to other currencies, principally the euro and the yen and the pound sterling, But that thing's fallen quite a bit. It's been at least 10%. And so that is what you'd expect.
That's right.
Dollar down, gold up. So for whatever reason, Dan Clifton is correct. Now, I want to go back. Let me go back. Dan, the Saudis, the Saudis are, last I heard, the Saudis were dancing cheek to cheek with the Chinese communists in various parts of the world. I don't want to provide too much information here. But my question always is, these rumors spring up. And I know the Chinese are our adversaries, and they would love to damage the U.S. dollar, and they'd love to substitute the Chinese yuan. But, Dan, the yuan is not a convertible currency. That's a problem. Right. And so I never understood why the dollar is going to collapse. I got a minute left for us.
And by the way, I never say the dollar is going to collapse. I'm saying gold is going up. And what we see is that central banks around the world are buying gold. This is China, this is the Saudis, this is Russia, this is India. You're starting to see a multipolar world develop. They're trying to develop a gold-backed reserve currency. It's going to take years to do that. The Saudis would have to replace their security agreement with the United States. But incrementally, you're moving in that direction. The Saudis opened up last week the idea of trading oil in other currencies. That may or may not happen, but that's a change on the margin. By itself, it's probably not enough, but it's acting in tandem with all these other factors that are happening. This is the first time since the equity market bottom, since Bretton Woods, where gold is outperforming the S&P 500.
Dan
we take
Clifton
that very seriously.
And John Carney, tough stuff, gold. Thank you, gentlemen. Appreciate it.